Hey guys, Zoe here from OneGlanceTrader.com, and in this video I'm going to talk to you about how to trade pin bars using my OGT price action indicator, and in particular how to trade pin bars going with the trend. So if you guys are just tuning in and want to get access to the indicator, just click the link in the description. It's absolutely free to get. Now, what I've done is I've just selected the Euro USD chart on a 1 hour time frame, and what I wanted to do was kind of get a section of the chart that gave multiple signals for the price action indicator. Now, I've set the rules quite loose, so it shows quite a few pin bars, because what I want to do is see as many pin bars as possible, and use my discretionary trading knowledge to be able to filter out these pin bars. So for those of you who watched my previous videos, I'm starting to get used to trading pin bars that are going with the long-term trend. When I first created the indicator, I was looking more from a counter trend perspective, which does work, and I'm still looking at all trades, even if they are counter trend as well. But predominantly, I'm looking for those A-grade setups that kind of really have more probability of going in my favor. So what I've done is I've created, as you guys have probably seen in my previous videos, some kind of rules. Again, I'm always adapting them. Some are mandatory, some I can kind of get away with depending on what it looks like. But I think the two main key ones for me is market structure and where's the other one there, and round numbers. I think these two things really give high probability trades when trading pin bars going with the trend. So what I wanted to do was go through, well, what I'll do, I'll go through my rules relatively quickly, and then we'll go through all of these pin bars on here, which ones are valid signals, which ones are not valid signals, and we'll discuss them in a bit more detail. So again, trading with the trend, I have the 20, 50, and 200 EMA. You can see here, and they have different colors on them, which I'll explain in a second. But if I'm trading pin bars with the trend, if it's a downtrend in terms of closest to price, I'm looking for the 20, the 50, and the 200. And if it's in an uptrend, I'm looking below price, the 20, 50, and 200 in that order. If they're not in that order, that's a quick disqualifier straight away that it's either a counter trend trade or it's just just looks messy, or it just looks choppy in terms of the chart. So I'm kind of looking for clear, distinctive trends that are pulling back, and then we'll continue on going in that direction. So this is now the bit here, the 50 and the 200 EMA should be sloping down or up, red or green, depending on where we are. So in this situation over here, so we take this situation here, this is the 50, this is the 200, they're both green, but in the pullback, as you would imagine, that the 20 is going to move first, being the faster moving average. As you can see, it's blue and then turns green because it goes up, but during this whole pullback, the 20 and 50 are still intact, which is what I prefer to see. Sometimes the 50 will also start turning, but depending on the situation, we can have a look at those examples in this video. So pin bar has touched the 50 EMA. The main reason for that is really because I want to get in at a better price. It's a bigger pullback, and that's the reason why that's there. And where are we now? Prices above, below the current direction of the trade. So as you can see here, I've got the cloud on here, the Ichimoku. So it's just the cloud. I've taken off the Tenkan Kijin, Chiku, and all that good stuff. So all I really want to see, just really as a clear direction, is that price is below the cloud. And if the EMA are in its proper direction, 99.9% of the time, you will get price being underneath the cloud in this scenario. So that's that one. So fib expansion 61.8%. Oh no, sorry, number 5. Pin bars touch are close to a round number. Now this is the round number indicator that I downloaded for free on the MQL5 website. I'll put the link in the description. It basically just prints lines of where the round numbers actually are. and I'm really looking for pin bars to be forming and touching either the wick or the body on or close to a round number. Again, very important. Fib expansion, so I like to use fib expansion, especially the 61.8 level, as a profit target, and ideally what I would love to see is the fib expansion close to or just before the next round number level. And number 7, like I said, market structure. Now, again, if you've got the EMAs in the right order, for a downtrend, for example, you are looking for lower highs and lower lows. And again, if it's an uptrend, you're looking for higher highs and higher lows. So, you can get the 3 in the right order just before it's about to turn. I'm just trying to think of examples. Here's an example here of where all 3 are pointing upwards, but you can tell it's just choppy. It's just useless. You can tell quite quickly that this market structure is useless. So you're looking for something quite smooth. Even this one is a bit, I still think it's a bit dodgy, but it is performing, higher highs and higher lows. So market structure quite important there. And then last one that I've added in is, again, still playing around with this, is that the ATR 21 period, the pin bar, sorry, should be greater than 1 times the ATR for a 21 period. So it's just trying to be, it's more of a significant candle of the last 21 bars. It is bigger than the average. So let's now have a look at all these. Let's just go left to right. So this one here is a bearish pin bar, and you can see that all 3 are green, none of them are red, so you can discount that one straight away. From a counter trend perspective, I'm just going to ignore it. Yeah, it does form on a round number, but I'm pretty sure the ATR is not going to be from 21 periods. What's that one? Let's have a quick look at it, just out of interest. 18. Yeah, it's about 14, 15 pips, so it's not even there. So that gets discounted. We come down to here. This one is a bullish trade, bullish pin bar, but as you can see, you got the 200 green, but the 20 and 50 are red. So again, I would discount this. It's underneath the cloud. Yes, the pin bar does form on the 200 EMA, which is a good resistance zone, but the price is going into another level, another round number level, which I wouldn't be comfortable with. And again, it just looks too messy. The market structure is broken from where it was. In this example, it does actually work out inside the favor. It does go up depending on where your profit target is before you get hit out over here. But again, I would avoid this trade. This one, again, is, you could argue, is going with the trend, but the longer term trend is still up from the 200. So again, it's in the cloud, looks messy. The next round number is here. Even though it does hit this round number and does go back here, it just doesn't look right to me. You shouldn't really be taking these trades. This one, again, counter trend trade does exactly work out, but again, for similar reasons to this one, market structure all over the place, and the moving averages are not in the right order where I want them to be. Okay, and again, this one, another counter trend trade, which again does work out. It's quite thingy how many good signals that this indicator does actually produce on a round number, which is great. But again, I'm trying to look at stuff with the trend. Then you got this one here, same again, counter trend. All 3 lines are red. You don't really want to be going long here. Same with this one, again, all 3 lines are red below the cloud. Again, round number coming up over here. You can see some indecision around this number. Don't want to get involved in this one. Now we've got this one over here, which for me looks like a perfect scenario. So let me just quickly look into the rules. 20, 50, 200, all in the correct order, above price. The 50 and 200 should be sloping down, red or green, red in this case. Yep. You've got the 20. I've got to probably zoom in on this, can't really see it. Here you can see that the 20 EMA is flirting now between being blue being straight and then sloping back up. So that's what you would like to see. This one started to come back in, and these two firmly staying red with no change in color. Prices are below the cloud in direction of the trend. There again, you see that. Got that nicely. Pin bars touch or close to a round number. Now this is also sort of the 1.18000 level. You can see there again. There's been a lot of indecision around this level and used as support over here, resistance over here. You're looking back here and you're thinking that this is a good level where price doesn't want to go above at this point in time. The fib level we'll talk about in a second. Last, market structure, again, lower lows, lower highs. It looks perfect. Compare back to some of the others we looked at. This looks absolutely fantastic. And then bigger than 1 ATR. So if ATR is 12.1. Yeah, I'm not even gone all the way, but it's about 18, 19 pips, something on those lines. So it's bigger than 1 ATR. Now let's have a look now at profit target. So again, like I said, I used the fib expansion. Hey, sorry about that. I'm not too sure what happened there. I think yeah, my computer just froze for a little bit, so I had to cut the video short. Fortunately, it saved, so I've just started a new one. So we were looking at this pin bar over here, and as I mentioned here, that I like to use the Fibonacci expansion tool, especially the 61.8% level, as a profit target, and hopefully it not being or before the next round number level. So I've put the fib expansion on already, and as you can see, the 61.8 level is actually probably where you'll probably be entering. So in this scenario here, I'll be looking at either the 100 or the 161.8, depending on what gives me a greater than a 1-to-1 risk to reward. Or what I've done was taken the previous swing high point, and then use this 61.8, which probably would have been a better level for me, just getting probably just over a 1.2 to 1. So that's what I would have used there. And then lastly, we talked about market structure and everything like that. So that's pretty much it. Again, entries, depending on when I get to my machine, sometimes it's already broken, and then assuming the analysis is all good, I'll enter straight away. While I'm doing the analysis, if it starts retracing back, then that's great. I'll get in at a better price, then I'll get in there. I'll keep the risk exactly the same at the moment on the on my what am I going to call it, on my journal that I'm doing on my journey. Again, all my pin bars are done at 10p a point, which is roughly, when you look at the account, probably about 1% risk, or even probably a bit less than that. So that's an example of a great pin bar to be taking. So if I get rid of that, then we've got this pin bar here. And again, it does work out. It still continues with the trend. However, the market structure has been broken. So this lower high has now been broken out. We've also now got the 50 and the 20 EMA crossing over, so they're not inside the right section. And okay, yeah, you could argue it's on a round number. Prices again above the cloud. Again, market structure is broken. That's the key for me here, and it eventually does reverse over, but it did do one last leg down. So I probably would have, definitely would have not taken that trade. And then you've got this one here again, which is a counter trend trade, which you could argue here is probably hitting these lows, and it does take off. And again, using market structure, it's probably on a good support line there, but I wouldn't have taken this trade. So you can see here in I think there was some more here we looked at. 1, 2, 3, 4, 5, 6, 7, 8 pin bars forming between let's just say let's call it the 1st of December down to the 11th. So in 11 days you've got 8 pin bars just on one pair alone. So you can just imagine if you did that on multiple pairs on the 1 hour chart. So again, I normally do the 4 hour and daily. I don't go down to the 1 hour because I'm not always at my screen, and the 1 hour price does move a bit more quick, so you have to be they're about straight away really to be able to do the analysis. Yeah, you can do it on your phone and stuff, but it's not the same. You don't really get some of these indicators and stuff on your phone by the basic ones. So hope you found that video useful. Again, you can download the indicator absolutely free, link in the description, and I'll see you on the next video.